Assalamualaikum and hi everyone, and also my lecturer, Dr. Siti Melissa. Okay, today I would like to present about the case of creative accounting involved Enron 2001 and also Toshiba 2015. Without further ado, let's begin. So, first, I would like to discuss about what is creative accounting in general. Okay, creative accounting consists of accounting practice that follow required law and regulations but swerve from what those standards intend to accomplish. Creative accounting capitalized on loopholes in the accounting standards to falsely portray a better image of the company. Although creative accounting practices are legal, the loopholes that they exploit are often improved to prevent such behavior. Also, Basin 2016 also described creative accounting as an accounting practice that may or may not adhere to accounting principles and standards, but deviates from what those principles and standards intend to achieve in order to present the desired business image. So basically, creative accounting is something that the accountant follow the normal requirement and treatment of the accounting. However, they try to find the weaknesses of the treatment itself and try to cheat without being realized from others. Okay? So this is type of creative accounting. There have been several creative accounting types, such as overestimate revenue. The purpose of overestimate revenue is to boost company's income. And then lowering depreciation charges by changing depreciation treatment. So basically, in depreciation charges, there have been several types of treatment that can be done with each of the assets. So if we decide to use one asset, for example, balance reducing treatment on one asset, so we need to use that treatment until it finish, until it until the assets value becomes zero. We cannot simply use one treatment and then change to the other treatment on the second year and change it back uh, to the normal treatment on the third year. We cannot simply change the treatment of depreciation because it is necessary to comply with only one treatment for one asset. However, it can be changed if the situation and after several discussion has been made from the top management, and and it need to be this agreed by all top management or majority. Okay, so the third one is delaying expenses. The purpose of delaying expenses is to defer recording of current period expenses. And then inventory manipulations. Inventory manipulation is the purpose of it is to boost company income by overstating the inventory. Then undervaluing pension liabilities. It is easy to manipulate because the future liability will be used for company estimations. And then masking contingent liabilities. So it will failure to record potential liabilities. And then second question, why do we even bother discussing creative accounting? It is because we don't want to be happen in the future or become or it will happen to us in the future. We don't want it to happen, so we avoid it. So this is the implication and effect of the creative accounting. The first, it will be effect to the investor. Investor, the losses will be major effect. They need to bear the losses made by the company. It's because the investor who invest their money into the company, and then after the company been catch or being revealed that he conducts some creative accounting, so the share price of the company will be dropped steeply and become the expenses for the investor itself. So they need to bear with the huge amount of the losses that the company made. And then second, of course, company, the effect will be public will lose trust in the organization. Also, employee will lose their job. Company may go to bankrupt or need to pay enormous money of sanction, being penalty by the law and others. Individual. Individual, the person who made creative accounting gamble their life. They will have difficulties to continue their life with white collar crime on their neck. What I mean is that the person who are being revealed that he doing the creative accounting will be blacklisted, and his name cannot and his name is hardly to get the job on their future. So they just gamble their life by getting by doing creative accounting. And then the purpose of discussing this creative accounting is to give enlightenment, especially for us accountant who to learn how particular event did happen. Therefore, we can learn from previous cases and prevent it to be happening in the future. So the third question, what triggered creative accounting and reported case on creative accounting? So I would suggest this four factor why creative accounting been triggered. First one is the greed to become millionaire or even billionaire. It's because the company who are actually not yet to achieve the millionaire status, and then they want to earn it fast to be funded, to be easy to conquer the market. And then second one, the pressure from top management. And third, did not practically apply ethical manner, even though it is code required to be as accountant. This is considered of code of ethics and so on. And then fourth, by having a dream to have better financial position to enhance the trustworthy of public with deliberately missed the fact. This is why I said just now, because they just want to look better in the position, in the financial position. However, they made a bit cheating in their financial statement. So let's begin on the first case. Case one, which is Enron 2001. So I would like to explain about their background first. So Enron established as industry of energy and natural gas in 1985 by Kenneth Lay. Enron is a merger between two natural gas transmission companies named as Houston Natural Gas and Internorth. Enron has been revealed as having creative accounting in their treatment of financial report on 2001. Enron conducts several accounting treatment with creative accounting. The first one, they create numerous account of special purpose entities, SPE, to off balance sheet regarding their actual debt. The second one, what they do is they use mark-to-market treatment to be used as hypothetical future value accounting. So basically, special purpose entity and also mark-to-market treatment is legal by legal to be applied by the accountant. However, they use this treatment and use it as different intention on what did this exactly mean. I will talk about that later. And then because of that, Enron has been listed as top 7 company in Fortune 500 in 2001. Fortune 500 is the platform for the company who are listed in the Fortune is represent 2/3 US company in terms of revenue, the highest revenue, profit, employee, and also market value. So this is listed in 2001. Okay, you can see the Enron is ranking number 7 with 100 million of revenues and also 979 profits, 79 million profits. So main character involved in Enron cases. First, Kenneth Lay, who is CEO and also founder of Enron. Second, Jeffrey Skilling, former CEO and also former president. Andrew Festo, Chief Financial Officer. Arthur Anderson, auditor of Enron. Tim Belden, head trader of Enron. Okay, so the story begins when Kenneth Lay invited Jeffrey Skilling to become the CEO of the company. The Jeffrey Skilling is basically only normal staff who are in the Enron, but he's hired, it's offered to be CEO of the company after Kenneth Lay see the potential of Jeffrey Skilling skills. So Jeff contribute several notions such as to transform Enron to be a trader of energy derivative contract, acting as an intermediary between natural gas producer and their customer. The trades allow the producer to mitigate the risk or energy price fluctuation by fixing the selling price of their product through a contract negotiated by Enron by a fee. Then Jeffrey started to emphasize company to be aggressive trading. He hired top candidates from MBA around the country and create a competitive environment within the company. So that's why the company become aggressive because he hired all the best student to become in Enron and compete to each other. So it's very effective actually, but yeah. Okay, so one of the recruiter is Andrew Festoff, who quickly rose through the position as CFO of Enron. Andrew Festoff is also begin as a normal staff and then up to executive and also become, and after that become CFO of Enron. And Festoff idolized Skilling and want to place him as a boss. Festoff oversaw the financing of the company through investment in increasingly complex instruments. And Skilling oversaw the building of its vast operation. So this is the two ideology between Festoff and Skilling, both to increase the company's profits. So Festoff job cover up the financial Enron and create a fantasy wonder financial of Enron. Festoff has created a company that associate with Enron under his supervision name as such as Chilco, Raptor, and LGM. After that, Kenneth Lay, Skilling, and Enron board signed off on Festoff LGM funds. Because of that, Festoff having power to manage the LGM as partnership of Enron and put all of Enron debts into the account under LGM funds. This is when I said before, when the special purpose entity treatment is used by the Festoff to separate the debt of the company of Enron company into LGM account, so that the Enron financial statement will not be seen their debt in the balance sheets. So Festo is general manager in LGM and CFO in Enron. So we absolutely can say that this is conflict of interest when it comes to make a decision. What I mean is because the Festo have two highest position in different company. So in LGM, he is acting as the general manager, and also in Enron, he become CFO. So when the transaction between these two company, he has authority to allow all transaction to be happen. He find a loophole in SPE and off balance sheet of Enron debt. Festo try to figure out the way to keep the stock price up by hiding the fact that Enron has $30 billion in debt. So he cheat a little bit to cover up the financial, and then cheat a bit to cover previous error until it accumulates. And he create unethical manner because the financial doesn't go to his favor. And on 1990s, on 1990, bull market helped fuel Enron's ambition and has contributed to its rapid growth. Everywhere there were offers to be had, and the business was able to build a demand for something that everyone might exchange. But it exchanged derivative contract for a broad varieties of commodities, including energy, fuel, paper, steel, and also for the environment. A section of electronic trading was launched during the dot-com boom, and the company invested in building a broadband telecommunications network to facilitate high-speed trading. So Enron, as a natural gases company, also invest in telecommunications network because he they see the opportunity to uh, enter the telecommunication network. But as the boom years came to an end, and as Enron faced increased competition in the energy trading business, the company's profit shrank rapidly or decreased rapidly. Under pressure from shareholders, company executives began to rely on dubious accounting practices, including a technique known as mark-to-market accounting, to hide their troubles. And 1996, the desire happened when US deregulate energy market because they have crisis on energy. Enron had Timbledon to revise the new regulation in energy industry to allow Enron to make money. He made an arbitrage trader to California because they have power to control utilities in the California. They are able to cut off the power and bring back the power with higher price when there is huge demand for it. So basically, Enron also want to control the energy in the California because California has made Enron because Enron had see the opportunity in the California place. This is when the investigation on Enron begin, when a reporter asking simple question on Jeffrey's killing, and this is a very simple question, such as how exactly Enron make the money, because the reporter has a doubt to and have strange feeling and on how Enron make the money because they only sell the energy, but they earn so many earn so lucrative way of money to in the business. So what did that happen actually? How they could manage to boom their sales? So that's why the reporter says. But when Jeffrey heard about the question, Jeffrey feel agitated about the question. Jeffrey Skilling also used a harsh word to analyze to the analysis to the analyst when he being asked why Enron can produce balance sheet or cash flow statement while their earning is extremely good. It's because they are trying to hiding something. So this is the reason why Enron keep doing unethical actions. The Enron trader also keep unethically to exploit human side of behavior. They persuade the investor to keep invest in Enron at higher price per share. The impact is the people lost their sense of morality in doing unethical job. Means they don't feel guilty on doing unethical job. They feel happy about doing that things. It is because the top management staff say magic words such as I will take all the responsible of your malfeasance to the bottom line. So they intend to continue the action because they have a what we call support. They have been supported by the top management to continue doing unethical actions. But in fact, the top management does want to responsible for that action. And then what happened to Enron case? The investor lost 74 billion after Enron collapsed. And then the permanent employees lost billion in pension benefit. It is because the employee itself has been invest their pension funds into the company because they thought there have been opportunity to multiple their money in the future, but in fact it does not. And the Enron has been bankrupt. And then the employees, they lost their job, and some people are suicide because they feel they have nothing left to live in this place, in this world. So it's very sympathetic on what this is said and on why this has happened. And the company bankrupt and ceased to close directly. The auditor required to pay enormous amount of fine, and their reputation is weak. For Arthur Anderson, they after investigation of Enron cases, there have been shred the paper of this paper that relating with the Enron to demolish to what to delete to delete all the evidence that have been uh, cheating in Enron cases. So they want to delete all the evidence so that the investigator could not see the proof. So after several years, I think Anderson involved in several cases, such as WorldCom, and some more have 2 or 3 big companies also that have involved, and they have been cheated so many times until they have been banned to be work as auditor. And that's why Big Five changing into Big Four because the diminishing of Arthur Anderson. So Enron collapsed. The Enron shares rise up to hill until it reached $90.75 per share on 23 August 2000. However, after Jeffrey Skilling resigned on August 14, 2001, almost 1 year after the price is 90.75, the stock value is dramatically decreased. On August 16, 2 days after Jeff's resignation, Enron's stock value began to drop to 36.85 per share and plummeting until the stock value became the lowest in the history of Enron stock, which is 0.26 at bankruptcy. It only takes 4 months for Enron to collapse after Jeffrey Skilling resigned. Therefore, he really influenced how success Enron as former president and CEO. So this one is case 2, Toshiba. Toshiba Corporation are established from 1875 in Tokyo. The existence of Toshiba is to accommodate the government's need of modernization. Toshiba received great recognition as the pioneer for a number of Japanese discoveries, including radar, microwave oven, color video phone, MRI system, laptop, and DVD. In 2015, Toshiba had operated business unit on a global scale in diverse industries, including semiconductors, electronics, infrastructure, home appliance, and medical equipment with net worldwide sales of more than 63 billion and employing more than 200,000 people worldwide. Then, the quality of its product and service put Toshiba in Japan 10th biggest company by market value. In May 2015, Toshiba is being investigated regarding of creative accounting out of the blue. All people were shocked on that time, but after deeper investigation, it was revealed that Toshiba Corporation is actually have been struggling to meet its financial target since 2008 amid the global financial crisis that cut deeply into Toshiba's profitability. Misconduct of the Toshiba occurred under CEO Atsutoshi Nishida in 2008, continues with next CEO Norio Sakaki, and eventually ended in scandal under Hisao Tanaka. Toshiba boss has quit the Japanese conglomerate over 152 billion yen, approximately 6.41 billion Malaysia ringgit accounting scandal that the government said threatened to undermine investors' confidence in the country. Toshiba overstated its operating profit over several years in accounting irregularities involving its top management. Tanaka and Sasaki knew about the profit overstatement and create a pressurized corporate culture that prompt business heads to manipulate figures to meet target. The inappropriate accounting technique varies between different business units, which include booking future profit early. This is also mark-to-market technique. Pushing back losses mean they don't record losses on fiscal period, and maybe they put on the next period, fiscal period, and then pushing back charges and other similar techniques that result in overstated profits. Although the technique vary, the investigative panel identified a single of direct and indirect costs to explain how inappropriate practice took hold across the conglomerate. However, Tanaka as CEO did not tell anyone to falsify account, but that he would take responsibility for the investigators' finding at a company that is regarded as one of the emblem of Japan industrial prowess. So basically, this is different from the Enron because the Enron is top management is asked to cheat. However, in Toshiba, the Tanaka CEO did not ask everyone to cheat or falsify the account, but they intend to do by themselves because it is the pressure from the top management. Tanaka is only pressure them, and they have no right to counter the instruction. So on 21st July 2015, CEO Hisao Tanaka announced his resignation amid an accounting scandal that he called the most damaging event for our brand in the company's 140-year history. It is related with an accounting scandal tied to about 1.2 billion in overstated operating profits. So, improper accounting was found to have taken place over the course of 7 years, involving two former CEO, as I said before, Hisao Tanaka and others, in the scandal alongside Tanaka. According to investigator, this is happened because firm top executives set unrealistic profit target which systematically led to flawed accounting practices. Since Toshiba company embraced a principle that failure would not be accepted, the divisional head learned that the only way to achieve this target by skillfully hiding data through irregular accounting techniques. Toshiba corporate culture is employee cannot act contrary to the intent of superior was an important factor enabling the emergence of fraudulent accounting practices. Toshiba corporate governance was proven weak with a poorly functioning system of internal control and at every level of the Toshiba executive. The investigation also reported internal control problem in all its finance, auditing, and risk management division, leading to failure in identifying and stopping early inappropriate behaviors. Since the failure was not accepted by Toshiba, quarterly targets were success yet and handed down near the end of the quarter when there was no time left to material affect performance. It soon became clear within individual business unit that the only way to achieve this target was to do so through the use of irregular accounting techniques. Toshiba Corporation was removed from a stock index showcasing Japan best company, and in the following month, the company's share fell to their lowest point in 2.5 years with 102 million net losses for the quarterly period. The company also noted poor performance in its television, home appliance, and personal computer businesses. By the end of 2015, Toshiba lost about 8 billion of its market value with approximately 4.6 billion annual loss. The impact of the scandal, although Toshiba management and board of directors have made significant effort to improve internal controls and corporate governance program since its 2015 admission of fraud, the new issue raised in late 2016 and early 2017 showed that the organization still struggles with ethical problems. After investigation finished, Toshiba released a statement outlining the initial action it would take in response to the report. The company has promised to examine the result of the investigation thoroughly and to reflect the report recommendation in its business practice going forward. Toshiba further promised to announce the result of its examination process in a timely manner. So this Toshiba is not ceased to close, but they still continues to operate, but with some procedure should be followed from after the issue arises. So there have been under probation process after 2016, after 2015, and until more than 2018. Also, total 8 company officials resigned following the report. The resignation removed half of Toshiba's 16-member board. Toshiba also revised the independent director should be twice the number from previous management. It means if the incident have 4 independent director and 12 dependent director, now it should only be 8 independent director and 8 dependent director. So from the position. So in conclusion, the issue arises basically because of the behavior and also the obedience of code of ethics as an accountant. It is occur because of lack of moral awareness in individual behavior. They agreed to achieve high ambition with possible shortest way, even it is unethical. Therefore, with the strict law today, I can assume that the number of creative accounting cases has been reducing from time to time. People who agree is always try to find the way of the weaknesses and loophole of the existence regulation. So regulation will be amended after any issue arise caused by creative accounting. So that's all for me. Thank you.